Wagwan traders, don't know it's Trades by O, and I'm back with another video. So in this video, as you can see by the thumbnail and the title, I'll be showing y'all how to identify supply and demand reversals. So as you can see, I'm on the 1 hour time frame. So that's the time frame I'll be using to show y'all how to identify supply and demand reversals. And the pair that I'll be doing this on is gold. So what I'll do right now is go ahead and eye the charts. So let's do that right now. And I'm going to go back all the way to 2023, right? Because this works. It doesn't matter what time of the year it is. It's very accurate and it works. All right, there we have it. So we're at January 2023, and now we're going to drop back to the 1 hour time frame, right? So I'm going back in time just to show y'all, how to identify supply and demand reversals, right? So with that being said, as you can see, I'm on the 1 hour time frame. And before we get into the examples, first I want to show y'all some demonstration, what it actually looks like before we get into the advanced examples. So I'm going to show you some clean examples before we go into some advanced examples. First you have a rally, then you have a base, then after the base you have a drop, then a reversal, then you look for your entry when you get that reversal back to the base, then profit. You get where I'm coming from. But guys, it's not gonna look this beautiful, right? So let me type it out real quick. So first thing first, right? A rally, and a rally is a push, an upwards push. Then you're gonna have a base, drop, right? In other words, or the abbreviation for this is RBD. So rally, base, drop, right? And right here, you get the reversal. Here, you will look for a entry, right? And this is the abbreviation. So rally, base, drop, reversal, entry, right? So this pattern that we're looking on is known as the supply reversal. So this is a supply reversal pattern, right? So first we're gonna have a rally, then we're gonna have a base, then after the base we're looking for a drop from the base, and then a reversal. Then once we get a reversal, you can look for your entry in the base. So let me just cover the base. It should look something like this. So there we have it: rally, base, drop, reversal, entry. Very simple. You do not want to complicate it, right? And guys, the fact that I'm showing you all this on the 1 hour time frame, right? It's simple. It simple means that that's the time frame you would want to use to identify the pattern. And I spell pattern wrong. I'm tripping. Right? So this is the time frame that you would want to identify the pattern. Yes, you can use a 4 hour, you can use the daily, the weekly, the monthly, but I'm showing you guys, with a 1 hour, because when you use a 1 hour, you can use this to day trade, right? So this, like, I'm a day trader, so hence why I'm showing y'all how to use it to day trade, right? But in this video, guys, I'm not going to show y'all how to take entries with it, right? So if you want a video like that, just comment below and let me know. Hit that subscribe button, hit that thumbs up, and make sure that you look out for the video, the part 2 video that I'm going to drop to show y'all how to actually take a entry once you spot this pattern in the market, right? So yes, guys, this is what it looks like, right? Clean example, but I need y'all to understand that it's not gonna be this clean on the actual charts. So we have a rally, then we have the base, then we have the drop, the reversal, and the entry. So what I would do, for myself, I would know that my abbreviation for this is R plus B plus D plus R equal entry. So why did I do this, right? The real abbreviation is RBD. That's what most traders are used to, right? Rally, base, drop. That's all they use, and the entry. But what I do, right? I make sure that I take note of everything that it's doing, right? Because these are important, right? Because without a reversal, we cannot get a entry, right? Don't get me wrong. Some people can enter, somewhere down here, but, it's going to turn around. Your stop loss got hit. Okay, you didn't wait for it to reverse back to the base. So I'm making sure that I take note of everything. So make sure that you're taking notes. Whatever you're taking note on, make sure that you're taking notes, guys. That's very important. So I have the first thing I'm looking for, when for a supply reversal pattern is a rally. So a rally, right, which is an uptrend, in other words, right? Then a base that can be considered as a consolidation, then a drop that can also be considered as a breakout. So let me go over that again. So you're looking for a rally, which is a uptrend pattern, right? Do not overcomplicate it. Do not overthink it. So a rally, uptrend pattern, right? Because it's not going to be that as clean as a straight line. So that's a rally, right? An uptrend. Simple as that. And then what you're looking for after that is consolidation, which is a base. So it's simple as that, guys. A base. Consolidating, the market consolidating. So that's the base. Then after the consolidation, you're looking for a drop. Now, this drop you're looking for, right, it's breaking out of the consolidation. Not just breaking out of the consolidation, but it's also doing a market structure shift. So it's no longer in a uptrend. Hence why it's called a supply reversal pattern. So once we have that market structure shift to the downside, which is the drop, now we'll be waiting for a reversal, right? As you all know, Forex is about patience, guys, right? You have to be very patient, right? Because patience pays. After we get that reversal, then when price comes back to the supply base, that's where we would be looking for our entry. And as I said, this video is not about how to take a trade or entry on it, right? In everything, you need to go step by step, right? And we cannot skip steps. So in this video, I'll be showing y'all just how to identify the supply reversal pattern and the demand reversal pattern. But we're just getting started because that's just a tip of the iceberg. Now, with that being said, right, we are going to go into some chart examples. So please remember this pattern. Take a screenshot or something, please remember it. Yeah, guys. Rally, base, drop, reversal, entry. So rally plus base plus drop plus reversal equals a entry. It's simple. We have the rally, we get the base, which is the consolidation, then we get the drop, which is considered as a breakout. Then we wait on a retracement and then entry. Actually, let's change this to retracement. Right, because this is already let's just make that smaller. This is already a, what you call it, reversal pattern. So really and truly, guys, it's retracement. That's a correct word. Nobody's perfect. So yeah, I just corrected myself. So the rally, the base, the drop, the retracement, and entry. So rally plus base plus drop plus retracement equal entry. Simple as that. Now let's get into some examples. So I'm going to clean this off, right? I'm going to clean the charts off right now, right? and we're gonna get into some examples, guys. So let's go. So as you can see, this is the 1 hour time frame, and this, I took it back all the way to January 2023. Let's identify some past supply reversal patterns. I'm gonna show you how powerful this is. All right, guys, it just created a base. So let me show y'all. So price did this, it's in an uptrend. So it's creating higher high, higher lows, whatever the case may be. And then we created some base right here. After the base, we got a drop. Right? Not the best drop, but I see that we had a shift in market structure shift right here. Right? The candle closed below the previous higher low, right, with a body. Now what I'm going to do in this case is just simple mark out the base. So there we have it, the rally, the base, the drop, and then you will look for your entry here, right? But this video is how to identify the reversal, right? I'll come with part 2 to show you how to find the entries, how to refine it and find and get entries. Now, just put market structure shift real quick. Now, with that being said, right, we have the rally, base, drop. Now look what happens. Pay attention to the zone. Guys, I can't make this up. I cannot make this up. Rally, base, drop. Let me zoom in for y'all, man. Look. After the drop, right, market structure shift right there, we had the retracement entry, right? So guys, this is very, very powerful, right? So rally, base, drop, retracement, and then entry. Let me show you how many that drop, how many that sell-off was, how many pips. That right there was 251 pips, right? So now let's find some more examples. We're still doing supply reversal pattern examples, right? So we're still doing supply reversal pattern examples. So let's clean it off the chart. So you see the first one. No, actually, let's make that stay. All right. So we're gonna make that stay. Oh, another thing that I must let y'all know, you can draw the patterns 2 ways. You can draw it from the body of the candles, right? Right, and an easier way to find the body of the candles, just switch to your line chart, and then you identify the body of the candles with a line chart easily. As you can see, easily, just like that. And this looks more like the simple example I was going through. You see the base, the drop, and yeah, go back to your candle chart, and then as you can see, you outline just the body. Now guys, you can do it 2 ways. It doesn't matter which way you do it. You can do it by the wick, right? You can cover all the wick area. I'm going to show y'all something. But if you do it by the wick, right? So if you were supposed to cover the wick, you would have to wait for a breakout out of this zone. So you wouldn't get that move. Actually, this looks beautiful. Now let me show y'all. We have a rally, we have a base, and we have an aggressive breakout, which is a drop. Now, the market structure shift would have been right here. Obviously, as you can see, the market, shift to the downside. Price broke under this low and closed. That shows that it's valid. Now, obviously, what we're going to do is wait on a retracement back to the supply base zone, and then let's see how it reacts. Okay, unfortunately, it didn't give us much of a big rejection that we're looking for, but as you can see, we still got a rejection. And let's see how much that rejection is. So you'd have refine this on a lower time frame and catch. That's 115 pips. That's still a decent move. So it was still valid. But as you know, the market is gonna do whatever it want to do afterwards. So just like that, guys, you can draw out the base zone, which is also known as the consolidation, right? Two ways. Are you gonna do it by the wick, or are you gonna do it by the body? Whichever one works. I personally use both, but I know you're gonna probably ask, what do I use mostly? I mostly use the bodies, right? So I mostly use the bodies. So you'll be seeing example of me drawing out the bodies for the base. So yeah, guys, with that being said, let's find another example. So let's just play this out. So right now, as you can see, obviously we get a rally to the upside, right? So let's play this out. We're waiting. We're looking for a base right now. So we waiting patiently. As you can see, the base is being built up. It's simple, guys. It's very clean. So just wait patiently for a drop. That's not the drop we're looking for. We need some nice big bearish candles. So that's not the drop we're looking for. See what would have happened to you? Exactly, that's not a valid drop. So we're still waiting, still in an uptrend, still in the rally phase, still rallying. So just be patient, guys. That's all you want to do. Be patient. All right, guys. So we have the rally. We have a big rally right here, right? Then we have a base. So as you know, I'm gonna draw my zones based on my the body of my candles, as you can see. So I covered the base right there. Then we have a drop, and then as you can see, price is back into the zone, and let's see what happens. There you have it, guys. Yeah, I cannot make this up, right? So we have a rally, which is a uptrend move. Then we have the base. Then we have the drop right here, and then we have a retracement, and then we would look for a entry in the zone. We would refine it, but that's gonna come in another video. So comment below if you want a video to know how to find the entry to catch these big moves, because literally after we get a retracement, this drop 180 pips, as you can see. Then price came back to the zone again and drop again. So yes, you can use the zone more than one time. So that's example 2, right? Supply reversal pattern. That's how you find the supply reversal pattern. So rally, base, drop, entry, right? And let's say you didn't like this drop, because this drop or this base, the type of drop that we got, this base would have been considered a weak base, right? Now you may be asking, what's a strong base? How do you know when a supply base is strong? You know that a supply base is strong when you have a aggressive breakout, right? So that means you have a lot of bullish candle dropping outside or breaking outside of the base zone. So as you can see, this breakout wasn't so aggressive, right? We had some consolidation outside, when this breakout was happening. We had bullish candle in the breakout, right? You mostly want bearish candle when we're getting that breakout from the supply base. So as you can see, yes, it was valid, it happened, but it was weak. Right, so we got the retracement, and then we got the drop. But if you wanted to wait on something more cleaner, something more aggressive, then if you waited, you can see that we had, price dropping more to the downside. And then you could have waited on that retracement and catch this entry, right? Do not overthink it. For right now, just remember, rally, base, drop, right? Retracement, entry, and yeah, drop. Simple as that. Simple as that. So that's example number 3, and we're gonna get into example number 4. So I'm going to do a video, right? Only if you all want it. Let me know. Click that subscribe button, guys. Make sure you click that subscribe button. Click that thumbs up. Comment below and let me know if you want a video going over weak, strong, very strong supply and demand reversals. So let me know in the comment below and let me know, right? So yeah, that was a example of a weak one, but we still managed to get 173 pips, right? So yeah, let's get into example 4. So let's continue. We're gonna do 5 examples and then we're gonna move on to the demand reversal pattern. So as you can see, we have a rally. It's creating the base right now and the drop is coming. So let's see if it's a valid drop. There we have it. There you have it. I need some more drop to the downside. See, we did have a drop, but I needed more drop to the downside, guys. So we're still in the rally phase. All right. So this is example 4. Right. It could have been example 4. Let me show y'all. So cover the body of the candles. We had a drop, as you can see, market structure shift under this low right here. Market structure shift, candle closed below that low, came back, retrace into the zone, and then it dropped. That's a quick one. As you can see, that was still 158 pips. Right, so I'm just going over that to show you like it was still valid even though it didn't drop or give a big move. So yeah, example 4. We're gonna make that be example 4. Right, but I didn't really like that one. So let's go into example 5. So we're having a rally right now. We're having a rally right now. Still, rallying. All right. So nothing yet. So we're having a base right there. As you can see, consolidation. There we go. So guys, as you can see, we have the rally. Then we have the base. Right? Now, this, my friends, is a very, very strong supply base. Right? This is a very beautiful supply reversal pattern. So as you can see, we have the big rally right here. We have the consolidation, the base. Then we have the drop, which is the breakout. Now, you may be wondering, why do I consider this a strong supply base? It's simple because we had nothing but bearish candle breaking out of the zone, right? And it wasn't just any bearish candle. These are big bearish candles, and we didn't have any bullish candles while this breakout was happening. So this, my friend, is considered as a strong supply base, right? So yeah, we had some nice displacement from that zone. So now we are waiting for a reversal. And my friend, let's see what's going to happen. No, I'm not gonna lie. I am not impressed. I am not impressed with what we got, right? So it didn't give us what we wanted. But I must let you know, no strategy out there is 100%, right? You see, we came back into the zone. We had a push down. Let's see how many pips that push down was, right? It didn't push outside of the zone, but it was like, 57 pips. Wasn't what I was expecting, guys. However, the strategy works, all right? So even if it's a strong, very, very strong breakout, it can still don't give you the best move, right? You just have to understand that you have to create your trading plan, set your goal, and you have to know when to exit a trade. But don't worry, this channel is fairly new and I'll be going over a lot of stuff. Just let me know in the comments what type of videos you need. So as you can see, right, I'm going to go over the last example. Then we're going to go over to the demand reversal pattern, right? So as you can see, we had a rally, we had a base, and we have an aggressive drop. This is aggressive, very strong. So this is the base right here, guys. And let's just see if price is going to come back to this base. Let's see what's going to happen. So unfortunately, it looks like price is not going to come back to this base. But this is the last, bearish example, but I'm just going to play it out and see. I doubt it though. But that's a fresh base. It's an untouched base, right? Yeah, that's mad days. So that's something that I want to wait on personally. But we're gonna go into the demand reversal pattern right now. But as you can see, we had a rally right here. Then we had a base, drop, retracement, entry. Now for this base, it came back to the wick. It didn't came back to the body. So guys, it's all about how you want to enjoy it, or it's all about how you're seeing the market. Because I, as a experienced trader, I could have caught this trade. I would have been like, all right, cool. It's not coming to the body. Let's find an entry from right there, because it was still valid, right? Drop. So yeah, guys, that should wrap it up. Let's go straight into the demand reversal. So for the demand, it's a drop, base, rally, entry. Right, so it looks something like this. So this is a clean example. Now let me just draw the zone. So the drop, base, rally, entry. So for this one, it's D, B, R. So drop, base, rally. So that's the normal abbreviation when it comes on to the demand reversal. But as you know, I have my own abbreviation, right? Because I want to make it clear, I want to make it detailed and very understanding, right? So as for me, as you know, let's write that out right now. It's gonna be drop plus base plus rally, right? Plus retracement equal entry. So it's simple as that, guys. So let me show y'all again. You have the drop, you have the base, you have the rally, you have the retracement, which equals the entry. Simple as that. All right. So guys, it's drop, which is a downtrend, bearish market. Then we have a base, which is a consolidation, right? Then we have the rally, which is also considered a breakout from the consolidation, or in other words, the base. Then we have a retracement, right? A retracement back to the zone. And then we get that retracement back to the zone. That's where you look for your entry. And then boom, profits. So this is a demand reversal pattern. So drop, base, rally, retracement, entry. right? So it's pretty simple. I'll be showing y'all some example on the chart, right? So that y'all can see the more complex example, right? Because this is just a clean example, as you know, right? So yeah, guys, with that being said, let's get straight into the demand reversal pattern examples. So drop, base, rally, retracement, then entry. So let's just clear the chart. Let's get straight into this. Oh, before I go, take a screenshot. Make sure that you're taking notes. Click that subscribe button, guys. Comment below. Let me know if you're learning something from this video. Share this with a friend or somebody you know trading or somebody that's just start trading. And yeah, because I'll be making part 2. Because I know y'all are going to want part 2 to find out how to get entries with these patterns. So yeah, just let me know below if you want part 2 to find out how to get the entries. All right, so let's get straight into the examples. And remember, I'm showing you all this on the 1 hour time frame. So as I come on the time frame, I can see already that we had a drop, right? So after the drop, we are now looking for a base, right? So we're still having a drop, which is a bearish move. So the drop is a bearish move, and it's simple as that, guys. Don't overcomplicate it. So drop is a bearish move. All right. Still waiting. Still waiting. It's all about patience. Nothing yet. We're still having a drop. We're still having a drop. Market is on downtrend. All right. So you have the drop. After the drop, we got a base right here. So let me just draw that out for y'all real quick. I'm gonna use a body. So as you can see, I'm covering the bodies. All right, so drop, base, rally, and now this is where we see what price is gonna do, which is the entry. All right, there we have it. There we go. Now this is not the cleanest example, but if you know what you're doing, you would be able to catch this move, right? Because as you can see, price went below the zone, but as you can see, this zone was still respected. Now, I need somebody to comment below, why was this zone respected, right? Below before I say it. All right. After you comment that, now let me go straight into why it was respected. Now, if this zone was violated, guys, right? If it was violated, price would have to close below the last low with the body of the candle. So let's just draw that out. Let's draw that out real quick. So that's the last low. But look what price did. Price did not close below with the body. It wicked, right? It wicked and it came back into the zone. And then it rallied, right? It rallies off. So that zone was indeed respected, right? We didn't have a shift or a break of structure to the downside, right? So structure was finished breaking to the downside. So let me show you all the example. Simple and clean. Drop, right? We have the consolidation, which is the base right here. Then we have the rally, which is the breakout right here. Then really and truly, after we had the rally, right, you could have caught a entry right here where you see this wick. That was the retracement back into the zone. And then after that retracement, you would get your entry and you could have caught, 60 plus pips. But if you want more than 60 plus pips, I don't know what your trading plan is. If you are paying attention to the zone, then again, we get another retracement back into the zone. And this retracement, it took out the low over this side, right? Which means it swept liquidity, but I'm not going to get too much into that. let me know if you want a video on liquidity below, right? It took out liquidity and then it respected the zone, this demand zone, and then it bought, and that was, a lot of pips. So guys, it did not break structure back to the continuing to the downside, right? Market structure was definitely shift right here, right? So it was shift right here. So let's just put market structure shift. Yeah, we got the market structure shift right there, guys. So drop, base, rally, retracement, respect to the zone, and then you find your entry and you enjoy those pips. So let's see how many pips that was. That's over 200 pips, guys. So that's example number 1. And as I said, if you want a video on liquidity sweep and how to identify valid liquidity sweeps, let me know in the comments as well, right? But this video is mainly about how to identify supply and demand reversals, and this is just one of the main supply and demands. There's a lot more different supply and demands out there, but we'll get into those in a different video. So let's continue. Let's go to example 2. So right now we're in an uptrend, so we gotta just wait to find example 2. All right, so we're back into a downtrend. So here we're getting a drop, right? We're getting a drop. We need to get a base. All right. So we had the drop, then we had the base. As you know, I love drawing my zones from the body of the candles. So yeah. So drop, base, we had the rally. Now we're waiting for the retracement. So let's see. Unfortunately, it's going to happen. We did not get a retracement back to the zone, which sucks. But it is okay. Because if you're patient, if you're disciplined, right, you will just miss out on this. Right? Obviously, there's other ways out to catch this move, but that's not what we're talking about right now. But yeah, guys, if this is the strategy that you're using, if this is the pattern that you're going with, then you will just miss out on this move, right? If you don't know other ways to caught this move. But with that being said, guys, it is okay. It's gonna happen. It's part of the game. The market does whatever. This was a nice setup. It just didn't retrace back enough into the zone, and that's okay. So example, I wouldn't classify this as a valid example too. So let's look for another example, and then we're gonna wrap this video up because I don't want to make this video too long. Because by now you should understand what supply and demand reversal is, and you should be able to identify it in the market, right? Because I want to send y'all to do some homework on the charts, right? This is not about rushing into the process to find out how to take entries, take trades with this. All right, back. So we got a drop, and now it looks like it's creating the base. So let's make sure it's creating the base. Boom. So it created the base, right? So let's draw out the base from the body of the candle. There we have it. So drop, base, where the aggressive breakout, which is the rally, and now we're waiting on a nice retracement, right, to the zone where we would try to find our entry. Right now I'm going to show y'all something. So I need y'all to peep this right here. You see, if I drew my zone from the wick, look what would have happened. After the rally, we got the retracement, and we could find an entry right there. But guess what? It's okay. It's all about how you want to draw your zone. You feel me? I do the body. So that already took off. But let's see if you're going to get that retracement to the body of these candles in this demand reversal zone. Let's see. Oh yes, we did. So yeah, guys, as you can see, drop, base, rally, retracement, get your entry, and then yeah, enjoy the pips. So that move was over 380 pips. Now let's look for example number 3. So you have the drop. This is the last example, and then I'm gonna wrap this video up. So drop. Now we're waiting on the base. All right, boom. So this right here is the base, and you know I do the body of the candle. So the drop, base, rally, retracement, all right, and then we will look for entry in the zone. So let's see. There we go. There we go. And guys, that leaves us to the end of the video. Right, that should wrap up the video. Right, as I said, I don't want to draw this video too long, but as you can see, the drop, which was, you know, downwards movement, or in other words, bearish market. Then we had the consolidation, which is also known as the base. Then we have the rally, which is also known as the breakout of the consolidation, which is the base. And then we had a retracement, and then after we got a retracement, that's where we'll look for our entry. And then after the entry, you enjoy the pips. And this was a nice move to the upside, which is 430 pips, you know, 30 plus pips. And then yeah, guys, that should basically wrap this video up. But with that being said, don't know it's Trades by O, and this video, I hope it helps you. I hope you learned something from it, and I hope you did take notes. Remember to like, hit that subscribe button, right? Comment below if you learned something from this video. Ask questions below. I'll be there looking for your questions so I can answer them. Share this video with a friend, right? And hit that notification bell so that you can know when I drop the next video on supply and demand. And also let me know below if you need a video to, you know, to find out how you can get your entries with this pattern. So with that being said, guys, that's it for now. See y'all in the next video. I'm out.
Pips pay my bills. Pips pay my bills. Pips pay my bills. Pips pay my bills.